Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. So last week, gold saw a turnaround in its trend. Bulls took charge again from last Thursday onwards. Despite a noticeable rise in the US inflation, uncertainties over the US economic, political, and some geopolitical developments have supported gold prices from below. Not much on the risk radar this week, but keep an eye on the FOMC minutes and the February PMI data for the US as they could sway gold prices. A brief review of the gold against US dollar daily chart over the past 7 days shows a break below the 100-day moving average last Wednesday, but it couldn't quite breach the key support at $1981, stopping instead at $1984. Bulls then step in, ending the downtrend since early February and bringing prices back into the $2002 to $2066 range. While Thursday and Friday's gain couldn't fully offset last week's 0.5% decline, the upward momentum carried into this week. Currently, gold is hovering around $2026, testing the 38.2% Fibonacci retracement level of the downward trend from late December to last Wednesday. If buying continues, we might see resistance at $2048 before hitting the upper boundary of the range. It serves as a local high from last April and May, and also marks the 61.8% retracement level of the price decline over the past 3 months. On the downside, the $2000 to $2009 range remains a notable support area. Well, despite a bunch of negative factors, gold prices are still climbing. Check out the latest US economic data for January. Just like CPI, actually PPI inflation went way up, with core PPI jumping 2% year-on-year, beating the expected 1.6%. That's given the Fed reason to hold off on cutting interest rates until June. Fed officials are also playing it safe, expecting 2 to 3 cuts this year, which has kept the US 2-year Treasury yield about 4.6%. Plus, the University of Michigan's 1-year inflation expectations have risen from 2.9% to 3%, and job numbers are looking solid as well. With all that going on, gold keeps on rising. So, what's the deal here? Firstly, the latest CPI and PPI data may have seasonal adjustment issues, and I reckon a single higher than expected reading doesn't necessarily mean we're in a trend. Also, retail sales took a nosedive in January, dropping by 0.8%, the biggest slide in almost a year, with 9 out of 13 retail categories taking hit. Considering the significance of consumer spending to the US economy, this post-holiday retail slump has people noticing the risk of deterioration in household spending. It may force the Fed to speed up rate cuts. Plus, there are still plenty of economic and political risks lurking in the US, making traders turn to gold for protection. On the one hand, the emergency bailout tool introduced by the Fed during the banking crisis last year, the BTFP, is set to expire next month, meaning banks might have to scramble to cover their $160 billion shortfall through the discount window. Coupled with that issues, liquidity risk in the US might intensify in March. On the other hand, with Super Tuesday on March the 5th shining a spotlight on the US presidential election, will banking issues take a backseat during the political circus? Only time will tell. On top of that, geopolitical tensions remain a factor to consider. Apart from the Middle East and the Red Sea, the Russian-Ukraine conflict is also worth monitoring, considering Putin's bid for re-election next month. So overall, the bull run in gold is still going strong. Despite inflation upticks, gold is finding support as a safe haven asset. Thanks to January US retail sales dip, potential banking crisis, US elections, and geopolitical tensions. Most think the Fed will cut rates this year, which gives gold an upside potential in the long run as well. However, short-term high interest rates make it difficult for gold to rise significantly. Coupled with relatively limited event risks this week, gold prices are likely to bounce around in a range. Keep an eye on the FOMC meeting minutes tomorrow. Although the unexpectedly high CPI and PPI inflation make it seem outdated, any remarks regarding the premature conclusion of quantitative tightening and the initiation of interest rate cuts could still elevate gold prices. In addition, the preliminary February US S&P Global Manufacturing and Services PMI data will be released on Friday. If the data unexpectedly falls below 50, it might spur early rate cut talks and give gold a lift. So that's pretty much for this week. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!